Thanks. Good afternoon, everyone. We are seeing people begin to roll in here this afternoon. Welcome to the latest in mortgage today. We're going to give it just 30 seconds or so to let everyone get ready for the show. What happened to the car? I almost had a car background, KP. It's right there in case
Oh,
you did.
oh, not not only do you get a car, you get three of my four kids, at least for a little
Oh,
bit. Say hi, monkeys.
hi. Hi.
We're
You're
we're
on
on
the
our
road.
we're on our yearly vacation. We went to Park City, and I'm filling up the Turo. If you don't know about Turo, Turo, it's like Airbnb for cars. It's amazing. I'm a huge fan. Don't worry, I'll be at a better spot here in just a second.
Yep,
Um,
not a problem. Not a
but
problem at all.
we were trying to find a Friday that would work, and this is pretty much the only one for like a month. And I was like, oh, no one wants to watch anything in July. It's summer. People are like busy with like kids. You
Yeah.
little monkey, hush your little mouth. I told you to be quiet, you little monkey. Anyway, it reminds me of my favorite podcast ever. The legend Rob Christman himself. He pulled over. He was going from like a Memphis trade show, and he pulled over, and I swear he was next to a cemetery. Like
We don't want that one. He also
it
has
was
had a
amazing.
horse in the background that looked like at one point it may attack him and some other things. So that,
Oh, that's awesome. Hey, you said horses. I'm thinking Jody. That's like her bag.
yeah, it is. She's on here with us right now, too. I think we'll go ahead and get started. This is the latest in Mortgage Today. Thank you, everyone, for joining us this afternoon. This is a place where we come together, talk about what's going on in the industry. We do want you to share information with us and also chat with us and ask questions. You've got like one of the greatest people in the world here online with us. Mr. Kevin Peranio, who is the Chief Lending Officer and Partner at PRMG. Thank you for doing this today. Please be careful as you're driving
Oh,
and talking
of
with us.
course. Yeah. Nor- normally I'm in my Tesla and it's driving me when I do these things combined with road trip, which is ironic because today there's a new trillionaire, Elon Musk, the SpaceX IPO. I just checked the stock price before we started. It's like at 162 bucks.
Is that
Uh,
right?
isn't it crazy? I mean, it's unbelievable that we have a trillionaire.
Yep. Yep. It's a crazy world right now. We're going to talk about that a little bit as we get going here. So, welcome everybody. We just had a bunch of additional people pop in here. And so I think we'll get going. Number one, I don't know how many people know this about me, but I love to my daughter used to call me the creeper, that I love to know about people a little bit before I talk with them. And granted, we've known each other for a while. I've started going in and just saying, tell me what you know about this person in Claude, just to kind of see what like
Uh
the
oh.
effects are. Yeah, it says, here's what it says about you, which I think, these things are true. Kevin Peranio, Chief Officer and Partner, oversees loan production, sales, digital marketing, and technology initiatives. He's known industry-wide as a forward-thinking adopter of modern lending technology and launched KP Talks Dollars and Cents, a video series on mortgage trends, leadership, and the technology shaping lending's future. Yeah, that was pretty good.
I'm totally letting Claude down. I had to manually drive. I actually used gas. What a terrible representation of Claude. But yeah, I like it.
Yeah, not bad. So this is June is National Homeownership Month. It's a lot of there's a lot of things going on right now in June. Little bit complicated right now, given where, rates have kind of settled in at and maybe not settled in at. And we're seeing some foreclosure trends starting to happen across the United States. You're in this market every single day. I would love for you to just share with the audience what homeownership means to you personally in 2026 and How do you stay motivated, helping other people get down that path and inspiring people to be homeowners?
Yeah, I think I probably speak for a lot of us. We love the American dream, right? We're coming up on our 250th. I'm a bicentennial baby, and I will be 50 in August. And so the American dream still rings true for me. Who doesn't love a good social media post which is just a snapshot in time or even a video of all the hard work it takes, the years, sometimes generations, to build enough capital to, get a down payment,
Yeah.
put a roof over your head, and take a picture with keys. I love it. I think that's what motivates us. I try and balance that with the other side of our business, which is cold, heartless, and unforgiving. We buy and sell money. So, everything ends up being a mortgage-backed security, and they have to perform. And for what it's worth, some would argue that mortgage-backed securities is the highest credit quality in the world, even more than a U.S. Treasury. If you're one of those that's fearful of us spending more than we make. So the American dream holds up all across the spectrum, the money side or, when you're putting a roof over someone's head. And, I think if I kind of zoom in to, where we are in 2026, there's a lot of, the press reads better 5-1 if it's negative, and that's just in general. But
Mhm.
let me highlight some great things about homeownership right now. I just saw the NBA chart of the week where it's 65% homeownership in America. That number has been 63, 62 and a half. 65 is improvement, and that's good. And I know we talk about rates. We had 4-year lows for like 3 days in March, and then we started this Iranian conflict, and rates have ticked up. I don't know what the 10-year Treasury is at today, but it closed yesterday at 444, 445. So it's been kind of range bound. And what I would say for that is, if you rent, you pay 100% interest rate forever. And rent can go up, and typically does. And you're making a landlord rich. And so you're building their wealth and equity over time. And so, I think our job as originators and owner operators is to continue to help people get into the house and start to build wealth. Because over time, it's a forced savings plan. You're going to pay for a roof over your head. It's, what is it? Air, water, food, shelter, and then love if you can get it, on Maslow's hierarchy of needs. So interesting enough, all the doom and gloom we've been reading about oil and inflation and the war and blah, 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 first-time home buyers represented 35% of all
Yes.
sales in May.
Yes.
The long-term average is 31, and May a year ago was 30,
Yeah.
and the month before was 33. So I don't know if that means that housing is affordable. I don't know if that means that the markets where it is affordable are popping up and lifting up the average. But I'd say overall, we're doing really well as an industry right now, despite the headwinds, and there are obviously several.
Yeah. I too, like you, like to stay in the positive trend of things and not look at the doom and gloom side. I think it's really easy to get stuck in that space. So I think it's much easier if you try to look for the things that are positive. One of the things that I found this week that was out there, there's a survey that was done by Ramsey Solutions. It surveyed over 19,000 consumers. And while the majority of Americans say they're struggling or in crisis, related to the cost of goods and all of those things. Um, they did not, there was a decline in homeowners that stated that they were experiencing mortgage related stress. From 38% to 43, from 43% to 38% from 5 years ago. So you think about where we were in 2021, and people are feeling, according to this survey, 5% less stressed about home ownership. And so I thought that was really kind of an interesting thing. I would love to know more about what goes into those data points. But it tells you a little bit that people, when they're wanting to buy a home, are relatively resilient individuals, and that it's really important to them. It also talked about budgeting habits and that budgeting habits are improving, with 47% of people now creating a monthly budget, when in the past, apparently 39% have. And then the other stat that they gave was 74% of people that have a mortgage that they surveyed believe that they'll be better off financially in 2031. So people are kind of looking forward to that 5 years down the road, even though it may be a little bit stressful right now. They're feeling like they're going to be better in 2031, that there is an end to this. So I would just love to hear, what you think about that, and whether that's what you're seeing in your daily business with your production staff.
Well, sentiment data is interesting because it's merely just that, right? It is, I think, on the margin, it is credible. You know, the psychosis of a borrower, like, hey, it's a good time to buy, or it's not, or I'm going to wait till rates get better. And, it's one of the ironic things about rates kind of staying elevated for a while. At some point, people are like, well, rates aren't coming down. Oh, and home prices aren't coming down. I waited. And so then they flip, at seemingly the worst times, because prices and rates are elevated, because we watch this stuff every day. And they're like, but I've been watching it for months, and this is what it is, and I need to pull the trigger. So sentiment data is a very interesting thing to watch. So let me put my cold, heartless, and unforgiving money hat on. What would they say in the if you were a stock analyst? They would say, "F your feelings." They just don't care. It's not about feelings. It's about does it work for you in this moment? And clearly, right now, despite what we watch every day, we're like, oh my gosh, rates are up, home prices are up, but people are buying. And so, let me just, I'm going to use some corporate jargon, which I love doing. But I'm a double click on this. So, because home prices have been softening, which is a major component of all these inflation readings, so has this, taxes going up endlessly, right? So taxes haven't been going up endlessly, which is great for people in a house. We had a pretty soft weather year last year, so home insurance didn't really go up. So, and in that time, wages have gone up. So, the whole thing about like wages is, does it keep up with inflation? Now, just lately, with higher headline inflation reads, you're starting to see a lot of people go, hourly wages aren't keeping up with inflation. And you may think, oh, wow, well, it just must be terrible. But the reality is hourly wages, it doesn't tell the whole story. It's weekly wages. And weekly wages are keeping up with inflation. And 60% of all the inflation going up is energy. So, so like, I can decide, a month ago, Walmart, which is a huge gas, seller, the amount of gallons per pump was under 10 gallons for the first time. So people are just driving less. They're traveling less. So people can make decisions. And so just because prices go up, I mean, one of the components that came out was, the stock market's ripping. The stock market is at all-time highs. And that was a big component of the inflation reading being up. But not everyone has stocks. And so what I will say, just to put a bow on this, not everyone in sentiment surveys, or people with high credit card debt, or people that are living paycheck to paycheck, that's not our customer. We want them to be our customer. We want to get them ready. And we are, with 35% first-time home buyers as all purchases in, the month of May. And so, so just take it with a grain of salt when you see, I mean, obviously you were some positive data on sentiment, but, there's also all the data like credit card debt and student loan debt. Those aren't necessarily home buyers. And so, we want to get them ready. So we have to be cognizant of those things. But, our clients are, a K-shaped economy, if you will. There are people that are gainfully employed in this no hire, no fire landscape, and they can afford to put the roof over their head. So not all the data you read about even applies to anyone we're ever even talking to. Of course, we want to get people ready, but the first-time homebuyer age is 33. So if they're under 33, yeah, they may be taxed. It's hard to get a job out of college right now because of Claude. So, it's just all these things we juggle every day, and all we can do is control what we can control.
That is a fabulous lead in where you said because of Claude to the next thing that I just kind of wanted to get your take on. So it was announced in the news that a lender was actively recruiting a chief artificial intelligence officer this week to architect agentic AI across the mortgage lifecycle. And so you've always been, I feel like PRMG has been one of the people, even before it was like a trendy thing to be or a necessary, maybe I should say not trendy, but a necessary thing to be because I feel like it's necessary for lenders right now. You've kind of been ahead of the curve on technology adoptions. Do you think that a dedicated AI executive is something that people are just going to add into their staff and have somebody that is like solely focused on that? Or do you think that people will continue to just have their leadership try to learn and be engaged at that level? Would just love to see what you think will happen with structures of companies.
Every company is going to be different. I've been reading about AI models since 2014. It's pretty incredible. Our company uses Capacity, which used to be called Jane.ai. We've been on them for over 6 years. So, we've been on the AI train for a long time. We have other instances that we use, which I think, we could always talk about. I think it kind of goes back to what kind of company do you run? Are you build versus buy, right? So, and that's just part of whether you want to have that person. I've been saying at my senior management meetings for about a year and a half, there may be a time when we hire someone in that's the chief AI officer. Mm-hmm. And you're bringing it up today because it's in the news. Look at Rocket. They hired a guy outside of the industry. They brought in a tech guy. From what I could tell, Arun has really learned the business. But that's a build shop, right? They build everything. And if they're going to build the latest and greatest AI technology, they may want to tap someone who's got years of AI experience to come in and transform their shop. Some people are going to home grow their talent. We have a chief technology officer who has, he's organically learned all this stuff and he's super sharp. So I think a lot of people are going to have that decision to make. And my guess is if you've been a buy shop where, look, we're the ones that run our company. We know what's best for mortgage people. And then we're going to buy this AI sales virtual assistant or this texting piece or this underwriting piece. We're going to buy this. And we're going to, rely on that tech company to tell us because they're the experts. But then when it comes to strategy and integrating it, we may just continue to use the people that are our homegrown talents that are learning how to integrate AI into their company. And I think that's what the majority of our network is probably going to do. It's also about scale, right? None of us are Rocket, right? But if we want to be the best, number one, you're a huge consumer direct company. You bought Redfin, you bought, Mr. Cooper, you want to go full stack and do all this stuff, you may want to hire someone outside who is an AI person. So I think every company is going to be different. Mm-hmm. And I still think, a lot of our network is probably going to home grow their talent. But I think it's about scale. Like how big does your company want to get? I think that ultimately is what would drive that decision. Plus, are you a build versus buy? And again, that's not a binary thing, being build versus buy. You could do a little bit of building and a lot more buying. It's just like is the Strait of Hormuz open or closed? It's not a binary thing. It's been open. Ships are passing through. So America just shepherded 200 ships through. Iran had some ships going through paying the toll. So, we're not in a black or white world. I don't think there's a right answer, but I think everyone just has to look internally in their company and see what works best for them and their culture.
Yeah. Yeah, absolutely. I think that it's kind of always that way. Sometimes your size, your current volume, and everything determines what you are today. Doesn't necessarily always have to be that same way down the road, depending on where your company is in its kind of life cycle. Um, where do you see AI delivering the most like measurable ROI right now? Is it in the origination, the actual origination process up front, processing, compliance, or something else? Where do you think there's the most ROI to be gained? Or is there one spot?
I I think there's ROI everywhere. Um, and I didn't quite touch on something I should touch on when you're talking about the chief AI officer, but hopefully you guys can get some mountains in the background here, and I'm hanging out. This is my airplane travel gear because it's always cold on airplanes. It's only an hour and a half flight. Um, governance, AI governance is kind of a big deal, right? So Freddie Mac has put out a policy. Fannie Mae is generally following. How are we going to implement this stuff and not have a regulator, say you used it, the wrong way or you had bias or whatever. And so I think when you think about how much AI do you want to implement into your business, you have to think about regulation, compliance, and governance. So I will say from what I see, ROI is everywhere in every facet of our business today. So you guys know I'm on the California Mortgage Banker Association executive board. I've been the co-chair 3 years in a row of the Mortgage Innovator Conference. And we were talking about, each of the last couple of years AI, and last year was like talking about disruptive things. This year it was, what is the ROI? Because people are getting ROI now. So we are getting ROI today. And so I think leaders of our organizations have a choice. And here's the choice that we made. And I'm not saying it's necessarily the right one, but we want to use it in sales first. So we've rolled out an AI voice platform, Sella, connected to Total Expert. That's our retail channels stack, and we're using their customer IQ data. And we're making about 2,500 calls a week with a 4 to 4.5% conversion rate. That's 2,500 calls a week on just like 300 borrowers in our portfolio of departed loan officers. So, that's our asset. Not everyone on this call is a servicer, but that's where we tested it because we think it's an existing business relationship. It's an easy way to be compliant. Like, this is our existing customer. We're saving you money. So I don't think anyone's going to give us any heat. So that's a conscious decision on our part to go to sales first. So let's lift up the salespeople. Let's generate new leads. And by the way, we've only rolled this thing out for like 45 days. We already had one loan funded. We have a lot of refinance activity, which means they're all kind of teed up and set up for when the rate gets to where they want, like a strike rate, if you will, to quote Barry and Dan at MBS Highway. And so if we build AI first in sales, load up the staff, give it to the ops staff, then we come behind them and we give them AI tools. So some people are like, hey, underwriter is my most expensive employee. I'm going to do AI underwriting first. Okay. So what you're saying is you may be firing underwriters, which maybe that's what that company wants to do. We want more business to make everyone who's already in the PRMG family busier, then come behind and to do ops later. So, that's our decision. And I think it's just, in my opinion, I think it's the right one, because we want to keep all of our people and just have them be more productive. So that's our strategy. Again, everyone's different, just like whether you need a chief AI officer, right? So, hopefully that gives some insights on what we're thinking.
It does. But maybe people aren't looking to hire or looking to fire their underwriters. Maybe they're in a situation where they're trying to get more out of their underwriters.
But if you don't, just I'll push back. But if you don't also get more volume, now you're
Correct.
overstaffed.
That is correct.
So
That is
what do
correct.
you do? So we want more volume first, then we'll work on the staff. And we all know this business is cyclical. Spring purchase season's, kind of winding down here this month, maybe next month. If we don't get a second half of the year refi boom like we have each of the last 2 years, we're in the same cycle we've always been in, which is like, well, we're not that busy and we're overstaffed. So what do you do?
Yeah.
So I think loading up on sales is the only way to ensure that you're not overstaffed. Because if you go to ops first, my guess is how good the AI is today, you will be overstaffed and underwriting.
Okay. You kind of led us into the next thing that I was going to ask you about because it's been out there a little bit in the industry in the last couple of weeks where this displacement of employees has been talked about. And there's been a lot of conversation about whether AI will displace loan officers. It's like, what's your honest take on that? I feel like people are always going to be needed in the process, and good people maybe are going to, just get better at what they're doing and take advantage of that. But I would love to hear your opinion on that.
I think like if AI becomes like Skynet and the robots have taken over and they could, black out the sky like in Matrix, yeah, I mean, the worst case scenario for originators is they'd be order takers. I don't believe that's going to happen. I really don't, especially for first-time home buyers. On refinances, I think we've already seen it since 2016 with push-button mortgage. But that's a consumer direct channel. But a lot of us in this network, we're in the communities, we're rooted, we have local knowledge, we have local relationships with local realtors, and there's an advantage to that. And we've been there. And I don't think AI can learn that because I still think first-time homebuyers want someone to talk to, even if it's just for 20 minutes, and that 20-minute conversation is super impactful. So for us using AI virtual assistants, it's just to set up a call. Don't talk about rest or trigger terms. Just make the phone calls. And so what's cool about that is you look at some of the largest lenders out there, they're consumer direct because, they drive phone calls in and then their originators do have conversations. They're not going out and creating conversations. And so what I like about some of the AI virtual assistant stuff that's out there is it allows us who are mostly distributed retail in this network to be consumer direct-esque. And so it's guerrilla warfare, And so, again, we're just sharing some things. We have a $4 billion servicing portfolio, and we're just working on the retail part of that. And, we want to give that loan back to our retail loan officer that brought it to our portfolio. But they, up to date, because we're not consumer direct esque, we just rely on the originator to like, all right, well, did your CRM email, did it hit? Did it strike a nerve? Did your social media post using social coach, did it hit? Did you get the bar to call you? Are you calling out? And did either of those calls inbound or outbound, did they get picked up? Did they hit at the right time? Whereas, if I'm a consumer, which we've seen this for years, if I want to make a phone call right now and I want to talk about my mortgage or I want to talk about a refi or I want to talk about, the next purchase, I'm ready right now. So someone better pick up the phone in 5 minutes. Our people don't always do that. I would say generally our originators do a good job of staying in the mix. And so I think 80% retention has been the mark that we've been hitting for distributed retail. But, you still aren't always there when you need to be. And sometimes it's like, oh, I just talked to this guy at the soccer game and he said this thing, or I saw this commercial on TV and I called it. Boom, our people are out. And so, I still think there's a time component to it, which, if using AI, again, we had 2,500 calls a week, an average of 2.5 contacts in that week per borrower, just to get a 4 to 4.5% conversion rate, either a live transfer to our originator or set up an appointment in the calendar to our originator. So what we did is we dished out 30 contacts in the first week from the portfolio. Then the next week we did like another 60. And so then, I'm just talking about like less than 300 contacts in the last 45 days, making 2,500 phone calls a week. Our people could never do that. We just,
Well, and
humans cannot do that.
Yeah, it's like icing on the cake, right? It's extra. They're still doing the things that they would have done before. It's just extra coming into you. I think that so my opinion is very similar to yours. I think that people are always going to look for that consultant. I mean, maybe if they're like us and they're in the industry, they don't look as much. They know what they want to do. They'd have it all figured out. But there are a lot of people that don't understand our process still. And if you look at our populations of people, brand new homeowners, first time home buyers probably are going to want that. And then there's also the flip side of that population that not everyone is tapping into, but is the reverse side of the business is very heavy consultation. And you think about all of the people that are over that time frame that may be looking to do something finance wise, they also are going to want that consultative approach, I feel like, probably more even than the first time home buyers on the upfront side. So I feel like people are still always going to be in the mix. Their jobs may change, but all of our jobs change all the time. And so I feel like people will always be in part of the process. So
Yeah,
we're
I agree.
yeah, we are at the bottom of the hour already. Can't believe it. Always happens so fast. I appreciate you hopping in on here. I always love conversations that we have with you and the things that you are willing to share with us. So thank you very much for doing that. For everybody on here, come back in 2 weeks. We will be back on with another lender from our TMC family to share with us their takes on what happens over the next couple of weeks. Appreciate you all. Thank you so much, Kevin, for doing
Thank you.
this.
Say bye, monkeys.
Bye.
Bye. Have a great time with your dad. Enjoy them. We'll talk to y'all soon.